Welcome to the Roadmap to Retirement Podcast. This week we are talking about all things insurance, life insurance, disability insurance, long-term care.
Welcome to Roadmap to Retirement. Tune in for financial tips, investment strategies, and smart money moves to supercharge your retirement savings. Alex Neri, CFP, and guests are here to help you build your roadmap to retirement.
It's not an exciting topic, but I think it's an important one. So Amanda, introduce yourself to the people. Who are you? What do you do?
So I'm Amanda Harvat. I am a brokerage manager with KAFL Insurance Resources. I help financial advisors, such as yourself, guide their clients in the right direction when it comes to insurance products.
Okay, love that. Thank you for doing that.
Yeah, absolutely.
Sounds like a noble passion.
I really enjoy it. I really do.
Great. So on life insurance, I think one of the problems with insurance and why it's not exciting is it's very transactional, right?
Mm-hmm.
It's if you die, your family gets this. And I think that's the wrong way to position it. I think the way that we want to think about it is more of just planning for the what ifs in life and how does that back into your actual financial plan. So one mistake people make is they're very intentional about their investments and their savings and all of these things. And then that what if comes around and either they're disabled and can't work, God forbid they pass away and their family's left to figure it out. So your job, not to put words in your mouth, is more or less to handle the what ifs in life.
Yes.
So what does life insurance mean to you in the broader scope of financial planning?
It's really the last, if the worst happens, the last thing that you will be able to provide for your family. And in their worst day, if something bad happens to you, they at least don't have to worry about the financial aspect. That's the last thing that they should be worrying about in their time of need. So it's really an act of love. It's an act of service. And that's how I see it. And I think it's my job as an insurance professional to convey that to either advisors who I'm working with or their clients to help them to understand that it really is an act of service to their family. That's the final thing that they'll be able to provide.
Sure. It's offering peace of mind to their family, and it's selfless in its act because
Yes.
I have a friend that likes to make a joke that life insurance is a scam because you die and then they pay you when you're dead. Of course, but you're paying for the other people. So it's selfless in that act.
Absolutely.
And then I think we can break down people into a couple categories and I'll just broadly say there's people that need life insurance. There's people that don't need it, but maybe they want it.
Mm-hmm.
So what are some signs in a really simple high level that somebody needs life insurance? They need to have this conversation and address the issue.
Yeah, absolutely. So if you have anyone depending on your income for their survival or for their lifestyle, you need life insurance. If you have debt that would potentially become the burden of somebody else if you passed, you need life insurance. If you have goals for your family, for your children, that would not be able to be accomplished if you were not on the planet, then you really need life insurance. So that sometimes that includes even education and planning for if you feel the need that you want to provide for your child's education and you wouldn't be able to do so if your income was not available. That's something that we can accomplish with life insurance as well.
Sounds so obvious, but I think a lot of people are just missing that piece. And I think of the typical young family. So if you're 30-something years old and you've got a couple kids at home that are young, there's an obvious insurance need that if something happens to you, you need to have money to fund the next 15 years of their childhood, maybe pay for college, and maybe you want to pay off the mortgage. Outside of that person, because I think that is very obvious to most people listening to this, of course, that person needs life insurance, but what are some more niche or unique situations where people might not be thinking that it applies to them?
Yeah, absolutely. So I do a lot of work with small business owners who have either arrangements with partnerships or they have key employees that if the key employee passed, it would be detrimental to their business. If they passed, it would be detrimental to their business. That is a situation where you would want to fund those situations with insurance. Buy-sell planning. So if you have a partnership, one of the partners passes, you need to be able to retain that equity in the company. Estate planning for more advanced estate cases, tax planning, life insurance. Typically, the death benefit isn't taxable. So there's a lot you can do there. Trust planning, things of that nature. There's really quite a bit that can be accomplished with life insurance.
Sure. So it applies to pretty much everybody, it sounds like. One of the issues that I see with life insurance is people have this I'm all set mentality because they have life insurance. Maybe they have insurance through their employer. Maybe they have a policy they bought 30 years ago that's still intact. So they just check the box in their mind of I've already got life insurance, so this conversation doesn't apply to me or I don't need to think anymore about that. Problem with that, obviously you know this, but I'll say it anyway, is that people end up being very underinsured. So if you are that, let's say 35-year-old couple and you've got 2 young kids at home, but your employer gives you a $100,000 life insurance policy, you get to say, yes, I have life insurance, I'm all set. But you and I both know that $100,000 death benefit is not going to raise your children for the next 15 years. And I pulled up some stats for our conversation ahead of this, but one of them is 22% of people with life insurance believe that they do not have enough life insurance. So even people that have insurance, a lot of the times are acknowledging without any professional eyes on it that they don't have enough. So what can we do to raise awareness of the underinsured people out there that have life insurance, but maybe they need to visit it?
Yeah, absolutely.
It's a long question. Is that okay?
Absolutely.
Okay, good.
I think it's, I always recommend that people review their life insurance and just their insurance needs in general, whether that's life insurance, disability, car insurance, liability, any major life event that happens. So you buy a house, you get married, you have another child, maybe a parent goes into long-term care, or just these major life events that have financial consequences associated with them. You should be reviewing your life insurance needs and reviewing your policies. If a spouse loses their employment, making sure that all of the benefits that they had associated with their employment are covered by what you currently have. So there's just a lot of situations that a policy review is due.
How do we make that fun? Reviewing life insurance sounds like the most mundane, boring task I could possibly think of. I don't want to review my life insurance.
Yeah.
How do I make it fun?
It's just a conversation. When you have a trusted professional that you can go to and you enjoy speaking with and you enjoy having those just conversations in general, it's a tough conversation to have. You have to realize that it's really about your family and what you are doing for them. And though it is a difficult conversation, it's one worth having.
Yeah. Okay. It's better to know than not to know.
Yes.
Still not fun, but I'll let that one slide. So I have 2 statistics written down. I didn't tell you this ahead of time. I'm going to put you in the spot for a minute.
Okay.
Do you believe that as a percentage, a higher percentage of Americans own or have a Netflix account?
Oh, that's a great question.
Good question. Versus life insurance. What percentage is higher?
If we are talking about just insurance in general, I might say a Netflix account. I might say that because a lot of people have life insurance through work, but like you said, it's not necessarily adequate.
Okay.
What is it?
The correct answer is both are at 52%. So it's a trick question.
Okay.
So 52% of Americans have a life insurance policy. 52% of Americans have Netflix. Now, for those of you listening that want to be really critical, I don't know that these are from credible sources. One stat came from Forbes, which seems pretty good. The other one came from Google's AI tool, which maybe is good. I don't know. But either way, we can probably agree that they're similar numbers and maybe they shouldn't be. And our next part of this conversation is the cost of it.
Yes.
So a lot of people might say, or they might object to the idea of life insurance, saying, I can't afford it, so I'm not going to buy it. Netflix is about $16 a month, I think, unless they change it again. And you and I both know that we can get term insurance very cheap.
Yes.
Actually, another stat I'll throw at you for fun. So 72% of people overestimate the cost of term insurance. So what do you say to people that say, I can't afford life insurance?
For me, we're dealing with 2 objections that kind of butt up against each other. One is, I'm too young for life insurance. I don't need it yet. And one is, life insurance is too expensive. And they have a crossover point because the younger that you are, the less expensive life insurance will be. Planning early and knowing what you want for your life. If you want to have kids, if you want to have a family, obviously I would never want to overinsure somebody, but if that is something that you want for your life, locking in your insurability early and locking in life insurance, it might not be an adequate amount by the time you're in your 40s or 50s, but at least locking that in early, it will be less expensive. There is a cost to waiting. There really is.
The sooner, I remember somebody early in my career, they were listening to somebody talk, and I think they had a background in life insurance sales, where they're talking about how it's obvious that you'll never get any younger than you are, but you're also likely not to get healthier. Most people tend to pick up diseases as they age and not reduce them. So today is the day to get life insurance, according to a old school life insurance salesman I once heard talk, which is not that interesting. So we talked about life insurance in depth. I don't know that I have much to add to the life insurance conversation. Is there something we're missing there?
Yeah, I think this is a good transition point to speak a little bit more about employer benefits, because like you mentioned, typical employer benefits aren't going to be quite enough for the average person. It's going to give you some coverage. It's not going to give you quite enough. We were going to speak about disability insurance as well.
Oh, we still are?
Yes.
Okay.
But I think just something to bring up also is that if you become disabled, whether you have disability insurance or not, after a period of time, you are no longer employed with your employer. What other benefits do you lose if you have to go out on disability? Do you lose your only life insurance? Do you lose your health insurance? Thinking about those things as well. If you were unable to work or you stepped away from work, maybe you have a child or something like that, you want to stay home, your only life insurance is associated with your employer benefits. That's also something to consider.
So now you're hypothetically disabled and uninsured.
Yeah. Yes.
And no insurance company at that point is going to give you insurance, by the way, because you're disabled. So probably want to address that ahead of time.
Yes.
Okay, perfect. That's a doom and gloom scenario. So let's avoid that.
Yes.
But it is a nice segue into disability insurance, like you said. So we talked about this one before, and this statistic has changed in recent years. So it used to be, according to you, it used to be that 1 in 4 people would become disabled before the age of 65.
Yes.
We were talking off camera before, and you said that you thought you saw somewhere that now it's 1 in 5. So it's reduced a little bit, but still a very good likelihood that any given person has become disabled and unable to work before their hypothetical retirement age of 65.
Yes. Yes, it's a significant number. And the statistics that I saw were from the Social Security Administration.
Okay. It's incredible.
Yeah, absolutely. And it said the average 20-year-old that is entering the workforce, 20% of them will become disabled in their working lifetime. So before age 65.
Okay.
So it is still a significant amount, going from 25 to 20%. Depending on where you look, that's usually around
Yeah,
what
and
the statistics
even
are.
if we're off by 5%, it's still a lot of people.
It's significant. It's significant. So we all want to think that it's not going to happen to us. I think when we use the term disability, it immediately, it has an emotional response because people are like, oh, I can't see myself ever becoming disabled. But I think we have to remember that it's not necessarily a visible disability. It's not necessarily on crutches or in a wheelchair or something that's very visible sign of disability. It can be illness. It can be a diagnosis of cancer. It could be an autoimmune disorder. It could be anything that could potentially take you out of work.
I do think it's harder to imagine than to compare it to life insurance. People imagine a scenario where they die easier than disabled because there's so many different ways that disability can look. And I think fair or not, there's people that have seen somebody else go through that and they've got the mindset of, oh, they should just suck it up and go to work, which until you're in that situation, you might not understand the gravity of the situation. So it's hard to imagine yourself disabled.
Absolutely. Especially when you're relatively young and healthy. It's a very difficult thing to think about, but it does happen quite a bit. So.
I feel invincible.
Yes.
It's not going to happen to me. Okay. So disability insurance. I think that's another area where people make the mistake of feeling that they're all set because their employer offers something. And you'll know more about this than I do, but most employers offer like 60% or so of disability insurance. If you go out on disability and you're making $100,000, now the disability policy can kick in and pay you an equivalent to $60,000. Yes. So pretty big gap to cover. And the mortgage company doesn't necessarily like your excuses. So I think it's important to supplement. But what are the mistakes people make there? And you can't get to 100%, correct? So you're only getting up to the 80% or so.
With an individual policy, you can get pretty close to replacing your full income at this point. And it depends on the company also, depending on which carrier you go with. Some are more willing to supplement than others. But I think it's also important, even HR, if you go to your HR reps, they typically won't even know. But they may say, okay, we'll cover 60%. There's a lot of things to look at within that 60%. Number one, is the employer paying for the coverage, or are you paying for the coverage out of your paycheck? If your employer is paying for your disability insurance and you have to make a claim, those benefits will be taxed because you've never paid the taxes on them. You're going from 60%, now you have to pay taxes on, that's an even lower percentage. And I think that's something to consider. Another thing is the length of coverage. I've seen hospitals provide their employees only 2 years of coverage, whereas with an individual policy, you can get up to age 70. That's not appropriate for every situation, but it is important to know the policy that you have and know the details. Another thing to be aware of is the definition of disability. There are a lot of definitions of disability within these various policies that are offered through group coverage or through individual coverage. And you want to make sure that if you are truly disabled and you cannot work, for example, let's say you are a surgeon and you hurt your hands, maybe you can go work at Walmart as a Walmart greeter.
So pay the same?
No,
okay.
Definitely not. And I think it's one of those things where you want to make sure that the definition of your disability is for your occupation, not just for any occupation out there, or else they're going to pull your coverage and they're going to say, you can go work here, so we're not going to pay your disability claim anymore. So it's very important, especially if you have a very specific job and you're qualified for that job and it pays you a lot of money, make sure you are protected for that profession.
Okay, so any occupation, own occupation.
Yes.
So we covered disability insurance pretty thoroughly. I think the big thing with both disability insurance and if you're looking at term insurance is we want to make sure that you have the adequate coverage. You don't get in the mindset of I have something through my employer, so I'm all set. And then also recognize that the cost of these things isn't that much. If you're someone that's scared off between money feels tight, I've got all the bills to pay, I don't want to add another bill. Neither the supplemental disability insurance or the term insurance are astronomically expensive, especially for a young, healthy person. So take the time, get it in place, make sure that you and your family are taken care of in that God forbid scenario. The next, if you don't have anything to add to that, the next kind of segue we'll take here is talking about long-term care insurance.
Yeah.
And this is a question we get all the time. I work with a lot of people that are at or near retirement. And unfortunately, they've had the experience of going through this stage of life with their parents already. So they've seen their parents getting elderly and sick, not able to take care of themselves. There's a lot of horror stories out there of the, quote, nursing home taking everything. And we want to avoid that. So we get the question all the time of what is long-term care insurance about? I know it's expensive. Is it worth it? Where do we go from here? So I'll let you fill in the landscape of long-term care insurance.
Absolutely. So there's a few ways that, if there is a need, and I like yourself, I see this all the time where somebody's seeing their parent go through it and they've had to sell their extra cars, they've had to sell their extra homes, and the Medicaid spend down or the Medicare spend down is not pleasant for most families. And the quality of care, it really takes away a lot of freedom of choice for the individuals who are being placed in that care. And that's very tough emotionally for families to go through. There's a few ways that we can solve these issues. There are a lot of people who choose to self-fund. I refuse to use the word self-insure because it's not transferring any risk. You're just choosing to take that risk on yourself and you're going to fund whatever events might happen.
Mm-hmm.
Traditional long-term care insurance, it works very similarly to home insurance or car insurance. You pay for it if there is a need. You have that protection there. It should protect your assets. It should protect your home and provide a benefit either directly to you or a reimbursement to the facility that is providing the care. We've seen historically that route is not my favorite. It is very expensive, and there's always a risk of the cost of that insurance increasing. And a lot of people in the past have been stuck in a really difficult position where they've paid for this care they've paid for this policy for a long time. The cost of care or the cost of insurance increases, and then they can no longer afford it right before they might need it.
Mm-hmm.
And that's not an ideal situation. There are products on the market now that kind of combine life insurance and long-term care. There's life insurance with long-term care riders, which is a great solution. And then there's hybrid products that kind of cover both. They are a little bit more pricey, but there isn't that risk of the cost increasing.
Sure. And it's somebody gets something at some point.
Yes,
so if you die, your beneficiaries get the death benefit. If you live and then die, because you will die, but if you live and then die, you get the long-term care insurance while you need it.
Yes.
And then your survivors get the difference. So
Absolutely.
It's a nice option for that reason.
Yeah, for those who will afford something like that, a solution like that, I highly recommend it because somebody is going to get the benefit one way or another. Mm-hmm. It's not going to be a use it or lose it situation. Sure.
It seems like with the rising cost of long-term care, you're scaring off a lot of people, right? They They don't want to make the financial commitment to pay that premium, understandably. So if you look at the income levels in America, just to broadly speak, the lower income level people probably can't afford the policy. The ultra wealthy people are going to go that self-funded route, not self-insured, but self-funded. Where do you paint the middle at? So what would you describe as like a typical family or typical individual that long-term care starts to be more appealing to them?
Yeah, and it depends on family dynamics too. But if you have children who, aren't going to be able to dedicate the time or their own money to your care, it's a really noble thing to do to not leave them with that decision to make.
True.
I tend to just ballpark anywhere from net worth of, let's say, 750,000 up to maybe 5 million. I don't know.
It's a lot of people.
It's a relatively large range, but those folks tend to have the ability to maybe dedicate $10,000 a year or so to a policy that will really protect their assets. It'll protect their vacation home that they want to leave to their children. It'll protect their retirement fund that they've worked their entire lives to build. And maybe they want to leave that legacy for their children or their grandchildren. It really can protect, we're not talking about the ultra high net worth, but it'll protect a decent amount of assets. And I think it works perfectly in those scenarios.
Sure. I definitely agree with what you're saying. I also think there's a spot for it with people that don't have a lot of liquidity in their assets.
Yeah.
So I think about a lot of my friends that are heavily into real estate. They've got real estate investments. They don't have the big portfolio that other retirees have, but they've got 6 rental properties. They have a vacation home. They have hunting land, whatever it is.
Yeah.
And for them, they don't have the actual liquid money to self-fund. So if they were to go into a situation, they need to free up cash. Now they're talking about selling homes and properties and all that to fund the nursing home. So I think there's room for a person that has a high net worth, but not a lot of liquidity.
I agree. And a similar route there is business owners, maybe ultra high net worth, but your entire net worth is in a business and in equity in a business. Yeah. That's not easy to liquidate.
It's a big conversation. Do you want to sell your business to fund the nursing home, or do you want to be able to keep your business so that your children can inherit it?
Yeah.
A big conversation. Cool. What else do we want to talk about? So we talked about life insurance, disability insurance, long-term care, really all the exciting topics that bring the people out. So that's good. Any other considerations from a risk management perspective for insurance?
I am not the expert. I always recommend liability insurance for those who may need it, an umbrella policy, or even just making sure you have enough liability insurance built into your car insurance that can prevent a lot of headaches. But I'm not the P&C expert, so I can't go too far. It's something that I try to bring up, at least to get people thinking about it. But.
Sure. Cool. We appreciate you doing this. The last thing before we let go, if somebody's listening to this episode right now and they're thinking, oh no, that person they're describing is me. I don't have the insurance I need. I've been pushing this off for years. How do they get a hold of you, or where do they go from here?
Yeah, absolutely. You are free to reach me on LinkedIn, email, anything. I'm at KAFL Insurance Resources out of Rochester. You can reach me through Alex. We work closely together. I'm sure we can get in touch.
All right. Sounds great. Well, thank you for being here. And this has been the Roadmap to Retirement podcast.
Content here is for illustrative purposes and general information only. It is not legal, tax, or individualized financial advice, nor is it a recommendation to buy, sell, or hold any specific security or engage in any specific trading strategy. Results will vary. Past performance is no indication of future results or success. Market conditions change continuously. This commentary reflects the personal opinions, viewpoints, and analyses of Alexander Neri. It does not necessarily represent those of RFG Advisory, their clients, or their employees. This commentary should not be regarded as a description of advisory services provided by Alexander Neri or RFG Advisory, or performance returns of any client. The views reflected in the commentary are subject to change at any time without notice. Advisory services offered by investment advisory representatives of RFG Advisory, a registered investment advisor. Alexander Neri and RFG Advisory are unaffiliated entities. Advisory services are only offered to clients or prospective clients where RFG Advisory and its representatives are properly licensed or exempt from licensure. No advisory services may be rendered by RFG Advisory unless a client agreement is in place.